Joining me is Australia's top finance writer, Terry McCrann of the Herald Sun. Terry, thanks for your time. You've just heard Clive Palmer's economic plan, 15% export tax on iron ore to pay down our debt and a 3% cap on home loan interest rates. Your judgment?
Well, Andrew, they are essentially thought bubbles. Like most thought bubbles, they can be very seductive. I mean, what could be better than when interest rates are about to go up to say that home loan borrowers will have only a 3% maximum rate. But as you indicated in discussing them with Clive, there are all sorts of thorns in this proposal. What actually happens on the other side of the equation, because the money that banks lend out to home loan borrowers comes from other Australian savings. So the inevitable consequence of that is to continue the zero or near zero interest rates that savers have been getting on their on their deposits all through this period. And you continue to hand out what is essentially a massive subsidy to home loan borrowers. Now, we could spend the next half hour getting into more of the detailed questions about how this policy is supposed to work. It just talks about home loan borrowers in general. It doesn't make a distinction between those buying their first home and those that might have 5 home loans or 5 investment properties. Are they also going to be subsidised by this proposal? So, I mean, and as you indicated, Andrew, it will cause all sorts of problems for the banks because they don't only get their money from depositors in Australia, they get their money on the international money market, and international rates are going up sharply overseas. And as you indicate, Andrew, you put it exactly correctly. If the bank has to borrow its money in New York or London or wherever at, say, 5%, then is stopped from lending at more than 3% domestically, it's going to lose significant sums of money. So it's really a proposal to fundamentally disrupt and destabilise the banking system. And we don't really need that precisely given what sort of future we now face.